Hi all, this is Ashish Kyal here. Welcome again to Elliott Wave News channel by wavestrategy.com. And you might have been anxious looking at the Nifty movement of past 3 days. Nifty has rallied by more than 400 points in just 3 days of time. So it was just around 10,100 and now it's quoting at around 10,600 odd level. So that's a huge move of around 400 to 500 points in a very short duration of time, and many would might be just trying to understand that what led to such movement. Is it the global market rally? Is it the fall in the crude prices, or is it what changed which resulted into the movement? And all this post-mortem will happen once the market has moved already. So once the movement happens, then the news and events will start coming in, and this is the reason why the movement has happened. But if you think and try to think logically, how does it even help if you try and analyze the market after the move has happened? So the point I'm trying to make here is we have been bullish on the market as soon as 10,170 was taken out in the daily research report, which is sent across to the clients. 10,170, 10,200 I've been mentioning as the important resistance, and once that was taken out, the entire tone of the market turned to bullish. Also, when the fall was happening from the levels of around 10,800 on the downside, many started telling me that at 10 to 200 or 10,300, why I am turning cautiously negative and not strongly bearish, because we should be breaking 10,000. At that time, I said I am seeing a very clear pattern on a neo wave or an Elliott wave chart, and as per that pattern, we will just flirt around 10,000 mark, and then we might start reversing. And that was the reason why I cautioned that it's not very favorable to go short near 10,200 levels to capture that last 100 points of breath or 150 points of breath, because if the reversal happens, it's going to be very sharp and very fast, which we are seeing now. In fact, when Nifty reversed back on the upside from 10,150, I also published in the research report Financial Waves short-term update, which is a daily equity research report that many are going to be taken by surprise. And I published a research article on the website wavestrategy.com. There is a strong positive divergence between Nifty and Bank Nifty index. Now that was a very classical indication that Bank Nifty, which was leading the fall, did not break the low of around 5th or 6th of October, but when Nifty broke the low. So that was a very classical indication that there is a positive divergence between Nifty and Bank Nifty, which we saw about just few days back. And at that time itself, I warned we are seeing divergence not only on Bank Nifty and Nifty, we are also seeing between Nifty and indicators. So if you look at the indicators like RSI, ROC, or any such indicator, you plot it, you will see that Nifty made a lower low, whereas RSI made a higher low. That is again an indication of a positive divergence, and you can see that positive divergence not only on an hourly chart. You, if you go and look at the daily chart, you will see that positive divergence. You go and check on the weekly chart of Bank Nifty, you will see the positive divergence. So it was across. After that, there was another indication when Nifty formed an inverted head and shoulder pattern, and majority of the stocks started forming a similar kind of a pattern. An inverted head and shoulder pattern is the pattern which is formed during a bottoming reversal, and it's a very classical indication. Once the neckline breaks, we get the shoulder target. So we mentioned about that the break of the neckline result into a shoulder target on upside near 10,550 is what has been achieved in the today's session. So there was not just one method which indicated we are reversing back on the upside, but multiple methods, including time cycle, which suggested that we might start seeing an up move, because the down move is not gaining the momentum, and even we are in the last phase of the cycle. Also 55 days time cycle, which I follow, clearly was in the 51st day, and it clearly hinted that now next few days is either in the formation of a base, or we might start seeing a rally, because the neo wave also suggested that we might be starting wave D on the upside of a extracting triangle pattern. Now this might look like Latin and Greek in extracting triangle pattern, but in simple terms, if you can see at least inverted head and shoulder pattern, you can see at least ROC or RSI as an indicator, and apply some concepts of channels, you are through in identifying the reversal again on the downside. So I captured the top near 11,700, and I came out very strongly and boldly that we might be in for a short-term low, and we might start seeing retracement of the entire fall which was of 1800 points fall on Nifty, we might see a sharp reversal on the upside, and many are going to keep guessing what changed. Let us now try and look at the charts and understand what is happening right now and what should be the trading strategy. We are starting a Diwali week, we are starting a festive week, and what should be the trading strategy now going forward. We have entered into a month which is going to be a state elections are going to be declared. There is a lot of volatility. It's not going to be an easy ride. It's going to be a volatile move. November, December are going to be a volatile move, but I think a short-term low is now in place. We are going to keep that low intact at least for a few weeks going forward, given that the time cycles are going to be in the buying zone at least for next 15 to 20 days. However, this does not mean markets are going to go one way on the upside. There are going to be dips. There are going to be certain patterns going to be developing, which I am going to mention in our equity research reports. I am going to mention the levels. I'm going to mention about what should be the trading strategy, and the clients who have been long at 10,150 levels. I have mentioned how to trail their stop loss all the while and where to book partial profits. So that is how the equity research report gives a complete, precise view. And many have been telling why I talk about after the move has happened, because for you to know about what I'm expecting going forward, you need to be subscribed to some of the research report where I'm mentioning these things, because there are people who are paying for that. And in this webinar, this is more from educational perspective and how you can use these methods in order to understand what should be the overall trading strategy. So please use this from educational perspective and not taking your trading decisions, because those are mentioned very clearly in the daily research report that we publish. I also came out with the multi-bagger research right exactly when the Nifty was forming around the base, and that multi-bagger research report was published at that point of time. It was not published prior because the markets were falling. It's best to be going and buying the stocks which looks like outperforming when Nifty looks like bottoming out, because that is when the strongest of the trend is going to start even in the stocks. You can create your own portfolio of stocks using that multi-bagger research report. Let me show across now the charts which I have been using in order to identify the turns, as well as what should be the wave count that is looking prominent right now. So if you look at this chart right now, you can clearly see this is an hourly chart of Nifty, and when the markets were falling from these levels, it even broke below the low which was made on 3rd, 4th of October or around 10th of October, but did not produce the required momentum. There was a classical positive divergence that you can see here, that Nifty made a fresh low, but there was a higher low made on the indicator, and it was not just once, it was 2 to 3 times there was a positive divergence. So the writing was clear on the wall that we are seeing some kind of a slowdown in the momentum on the downside, and if reversal happens, it's going to be sharp and fast. So over here we can clearly see Nifty was moving in a downward sloping channel. Once this channel has been taken out now very closely and very clearly, we can clearly make out that the overall low is formed now, and we are going to see some retracement of the entire down move. So this is the channel which I would draw. This is not a very good channel because there have been whipsaws around it, but it is still acceptable because this is more or less giving you the overall direction of the trend. If you look at the daily chart, Nifty did give break below the lows of the bigger multi-year trend line, but it just gave a false move. And today's session, it has given a close back above this line with a gap. So there is a gap up move and back towards the higher levels, which clearly suggests that the move on the downside was false. And whenever there is a false down move, we see a very sharp reversal, because there is short covering which results into the market on the upside, and at the same time there is fresh long creation because the stocks have been trading at a very lower levels compared to what it was just a month back. This results into a double confirmation of an up move, because a short covering accompanied by a fresh long build-up results into a very sharp rally, which we are seeing right now. So going forward, what should be the strategy? So before that, let me point out what is the overall wave pattern that I am looking at. The X wave was completed at the high of 10,950 or around 11,000 levels. From there, the entire move on the downside was wave A. We saw some retracement on the upside towards 10,700 in the form of wave B. Then the slower fall in the form of wave C, which is most time consuming as per Glenelly. This C wave will consume more time and is more complex than the prior wave, which is a classical indication here. And as soon as we saw a faster retracement of the last falling segment here, that was the indication that a low is formed and the trend line and the channel was started breaking at this point of time. Over here itself, we saw some retracement, and then the move on the upside was again a higher high, higher low on an hourly chart, and then we started breaking the averages as well. So this is wave D. So if you understand the neo wave pattern of extracting triangle, we completed A, we completed B on the upside, we completed C down here, and now we are in wave E. This wave E is supposed to be bigger than wave B, and exactly a week back I mentioned in the report this wave D is going to go towards 10,600, 550 to 10,600 levels, which we can see in today's session. It's a bang on move of Nifty, and it's no surprise to our subscribers who have been reading the research report very thoroughly. So this wave D is going to be now completed soon over next few days, and we should start seeing some retracement on the downside, or maybe in terms of sideways action, which is going to complete wave E, and that is where the extracting triangle pattern might get completed, and we are going to then start again seeing a retracement on the upside for some time, because the time cycles also this time, which is a 55-day cycle I follow, is also bottoming out now in this zone. So there is a time cycle confirmation, the price is confirmed, the neo wave pattern confirmed. You can clearly see an inverted head and shoulder pattern formed over here at the lows. So anyone wondering about the pattern, so this is the inverted head and shoulder pattern. You can see the shoulder, you can see head, you can see the shoulder here. So even if you did not go long during the break, but you went long as soon as 10,290 was taken out on the upside, that also gave you a sufficient enough move on the upside so far. So for coming week, the overall tone is going to be sideways to positive. It's best to buy on the dips, it's because the risk reward is not favorable now, but the tone is going to be positive. Use dips as a buying opportunity and do not short the market in the current scenario. You can look for shorting a specific stocks, but definitely not the market as of now. So this clearly shows how amazing the various, so when the various indicators, so I am again repeating, there was a divergence, there was a trend line break, there was an inverted head and shoulder pattern. As per neo wave, we saw clearly expecting triangle, a slower momentum in the wave C, and now the D should start, was the forecast of neo wave and Elliott wave. And the time cycle suggested we are in the fag end of the fall, and that's why we should start seeing a bottoming or a base formation. So each of these methods confirm what should be the trade setup, and it worked out very accurately this time as well. So if you want to learn about these methods that I am applying, you can also register yourself for the upcoming training on 24th, 25th of November in Ahmedabad, where I am going to discuss about various of these methods, why I turn bullish, why I turn bearish. There are times when things does not work. It's not always the way it should work. It's all about probability. There are times when it does not work, but if you are even maintaining your 80% accuracy or 70% accuracy, that should be sufficient enough for you to make money into trading. That's it from my side, and see you again next week, same time. The webinar will be available on the website. For if you want to register for training, you can visit wavestrategy.com or call us on 9920422202, and you can block your seat. Only few seats left now. You can block your seats, and I'm going to see you there in November 24th, 25th. There is a Diwali offer which is ongoing. Please, you can register for that. There is up to 50% discount on various research products. We gave Nifty, Bank Nifty calls over past many trading sessions, and there is not a single stop. It's not always going to be that way. I'm not going to claim anything false. There are times when things are tricky. There are times when stops get triggered, when the markets are in sideways range. But there are times when the accuracy is amazing. So you need to ensure you are making money during that accurate phase of the market, and you stick back during the phase when it's not working well, so that when the accuracy phase again starts, you are going to make money again in that phase. That's how it's going to happen. So subscribe to the intraday positional advisory by visiting wavestrategy.com. For any assistance, you can always call us or write to us on the number which I have discussed. Thank you, and have a wonderful festive season ahead. Wonderful Dhanteras and Diwali, and hope this festive season brings amazing opportunities for every one of us. going forward, and next year is again going to be an amazing move with a lot of volatility, and if you are on the right side of the trend, lot of opportunities to make money. Thank you. See you again same time next week, and this webinar will be available on the website after an hour's time. Thank you.